Let's bring in Fast Money friend Gene Munster of Loup Ventures for more on the quarter. Gene, your take.
Melissa, I'll start with a comment about the guidance. It was, in fact, revenue guidance 5% below the street. But keep in mind, that was the same guide down that they had when they reported their December quarter. There's a lot of pins and needles that people are on that kind of make it sound worse than it is. But that earnings guidance obviously impacting inflation. And Melissa, just to bring it to its most simple point, there are two headwinds that Amazon is facing. Consumer is starting to slow. Their retail business was down 3% year over year. It's going to be down about 6% in the June quarter. And second is they are particularly susceptible, as you've outlined, related to costs, 1.3 million workers, all of those expenses, logistics going up. You mix in, throw some high valuation into that, and I think that this stock is going to be parked for some time.
The year-on-year comparisons, Gene, how much should we discount because the comparisons are tough year-on-year?
They are tough, and 2022 is the year we're going to start to baseline some of those. But it doesn't change the fact that, by the way, the comparisons for Amazon, in Amazon's case, it was going up against a 20% comp, much easier comp than what Apple just fought through. And so it's, yes, the comps matter. That does explain why these growth rates are slowing. That's what 22 is going to be all about for all these companies, is baselining the growth rates. But I think in this case, it was a little bit more sharp of a decline than I would have expected, especially on that retail business. I think it's a read on the consumer. I think we're just, this is something that I think you can see through to the rest of the economy. And I think you're going to see this, a very similar type of a commentary with, again, accelerating declines for Amazon retail business in the June quarter.
Gene, it's been mentioned a few times on the desk, the difference between retail business or consumer-facing business and the enterprise business. Going forward, should we be focused on things like cloud, or should we be focused on consumer-facing parts of their business?
I think that the most important part of the story is still retail. I think it's still consumer. If you just look at just raw percentages of the revenue, the advertising business is impacted by retail. We're still talking about 85% of Amazon's business is related to retail. It's nice that they have shiny things growing fast on the side, but it doesn't change the substance of what Amazon is. And this is a play on consumer spending, number one, and number two, logistics. And both of those, again, are hitting some headwinds.
So, Gene, now I'm going to ask you to put your stock prognostication hat on. This is a name that's been in the sideways range, albeit between, I don't know, 2,800 and 3,350 or so for quite some time. Right now, we're below that range. What does that mean, if anything, and what's the right price for Amazon, given what you just said?
I think the right price over the next 3 to 6 months is lower. I'm going to slightly avoid the detail of that question because the market multiples are going to impact that. But I think we're still, when I think about this, the next 3 to 6 months being a baseline in some of these big tech companies, I think Amazon is particularly susceptible for the reason of valuation and those other two headwinds. And so, got to answer your question is I think that it probably is going to bounce around and then probably drift lower over the next 3 to 6 months. Ultimately, I think, again, 2023 is going to be a great year for tech. And I think that in Amazon's case, what they're doing, investing in logistics, is a massive defensible business. We will come back to this, but I think it's just a little premature.